webinar. I'll be starting in just about a minute. So here's a minute just to confirm that you can hear me okay. If you can, please use the attendee list pod to put up your hand. There's a little icon bottom right hand side. Just put up your hand if you can hear me. Thank you, Colin. Thank you, Ben. And just make sure you put it back down again in case you want to use that to ask questions later on. So thank you, guys. Thanks, Ted. And I'll be starting in about 30 seconds. This event is being recorded, by the way, and after it's finished, I'll send you a link to the recording and also to the additional materials that we promised you in the promotional materials. Well, it's 4 o'clock here in LA, which means it must be about 9 o'clock in the morning in Australia, depending on where you're dialed in from. So welcome to this webinar. The title is The Death of Field Sales. I'm happy to take questions throughout this event. You can put up your hand, but probably the best bet, because I'm handling this alone, is to simply type a question in the chat window, and I'll respond to them as I see them appear. So let's kick off. We've got a lot to cover. As you can see, the title of this event is The Death of Field Sales. And the subtext is a 12-step program to kick the field sales addiction. So, as should be obvious from the subheading, the title's somewhat tongue-in-cheek. I'm not actually advocating the elimination of field salespeople. Although I would like to shake you up a little and encourage you to consider or to view the sales function through a new lens, hence the hyperbole. So the message isn't that we should eliminate field salespeople, but rather that we should think carefully about whether we need them or how many we actually need. And what I would like you to do is to consider over the next hour adopting a new paradigm from which to consider sales. And what I'd like to encourage you to do is to transfer from thinking about sales as essentially an outside function, which is normally the case, to thinking about sales as essentially an inside function. So I'm going to encourage you, as you build or re-engineer your sales functions, to think about building sales from the inside out as opposed to from the outside in. Okay, so let's get started. So the old paradigm, as I mentioned a second ago, at least this is my thesis, the old paradigm is that sales is an outside function, an activity that's performed out there in the field. I'm arguing that paradigm no longer makes sense. It probably did at some point in the past. I'll come to that in a second. And that consequently we should now be thinking about sales as something that occurs essentially inside. Now, the reason this is not just an academic argument is if my thesis is true and sales is something that should be done inside as opposed to outside, what that means is we end up with a new set of rules. These new rules emerge for one of a number of reasons, but if we switch paradigms, we end up with a new set of rules nonetheless. So here they are. Number one, you should centralize everything, absolutely everything that you possibly can. In other words, if there's an activity that you can perform inside, you should perform it inside. Number two, you should commit to the internet as the primary source of sales opportunities, rather than proceeding with the expectation that salespeople will grow their own. And number three, you should add outside salespeople only as a last resort. And this is almost the corollary of number one. It's just another way of saying if you can do it inside, you should do it inside. And there are good reasons for that, which I'll come to. And the fourth is that you eliminate commissions and all performance pay. Now, it's probably not immediately obvious the connection between thinking about sales as something that occurs inside and the requirement to eliminate commissions and performance pay, but I'll get to that in just a minute. And trust me, there's a damn good case for it. Okay, so let's tackle, or let's first work with my suggestion that sales used to be something that existed outside, but today it should exist, or it should live inside. Well, historically, sales did occur outside, and the reason sales occurred outside is because that's where our clients were. So before the days of internet, instant messaging, email, web conferences, etc., etc. There really was a division between us in our organizations, in our offices, and the clients. And our clients were out there in the field somewhere. And consequently, we employed salespeople, we gave them company cars, and their job was to go out there in the field and communicate the knowledge that we had internally out to clients who were out there in the field. But of course, times have changed. For the most part today, the division between inside and outside simply doesn't exist anymore. The reality is that your clients can talk to you at your desktop using instant messaging, using Skype, or using a combination of the two. You can conference with them from your desktop using web conferencing or conference calling software. Clients can contact you wherever you are, in fact, using your cell phone, and many of them are quite keen to get their hands on you or your team members' cell phone numbers. And then when we add to that email, websites, which interestingly are for the most part designed in such a way as to merge almost seamlessly the bricks and mortar of your traditional inside business with, the marketplace out there. They're deliberately designed as a way to let your customers, in fact, to encourage your customers into your business. So my point is that nowadays customers are inside. It no longer makes sense to think about or to proceed as if there's a division between what's inside and what's outside. So if this division no longer exists, what we need to acknowledge is that there are very real costs associated with operating as if it does. In other words, if we employ salespeople based upon an assumption that we need them to ferry data backwards and forwards between our office and out there in the marketplace where our customers are, then there are a number of disadvantages or costs associated with that. Now, the first couple are fairly obvious. Field salespeople or field representatives of any flavor cost more than internal people. So what I mean is, if we compare two people, each with similar experience, similar capability, one of them is field-based, one of them is office-based, odds are the person who's office-based is going to cost about half what the field-based person costs, especially when we take into account all of the costs associated with them operating out there in the field. Okay, so, and that doesn't just apply to sales, by the way. Now, there's an argument as to whether or not a field-based person is more effective than an internal person. But here's the thing. They would have to be enormously more effective to compensate for the additional cost, but more importantly, to compensate for their productivity. So let's talk about number two, less activity. If we have a salesperson operating out there in the field, those of you who've been reading our materials and following our message over the last 15 years or so would know that in a very efficiently designed and managed sales function, it is possible to have salespeople performing 4 appointments a day, 5 days a week. And if your salespeople have that volume of accessible capacity, the consequence is you will have a large number of opportunities open concurrently. And with a large number of opportunities open concurrently, it is in fact possible to batch together meetings by regions and eliminate the travel times to the point where salespeople realistically can do 4 appointments a day, 5 days a week. So it's possible. But how does that compare with a person with similar capability operating on the phone? Well, a salesperson doing 4 appointments a day, 5 days a week would do 20 appointments total a week, which is about 5 times more, about 10 times more than a typical salesperson would perform. Okay, but let's assume that we had a salesperson doing 20 appointments a week. That same person, if we brought them inside and had them operate on the phone, could easily make 40 meaningful contacts on the telephone a day. Okay, and now if we assume that some of the communications are being performed via instant messaging, email, and so on, then they can be even more productive. In fact, it's quite possible for somebody to actually have more than 40 meaningful contacts a day if they're a telephone-based person. So not only does the same person cost us more in the field, but they operate at a fraction of the level of productivity that they do internally. So if it is true that a person is more effective in the field, they would have to be probably 20 or 30 times more effective to compensate for the cost in terms of money and in terms of lost productivity. Now, the next problem that we have, if we are performing activities in the field that don't actually have to be performed in the field, is we inevitably end up with poor integration between the field and head office. And that's important because there are a number of decisions that are made in the head office relating to operations, finance, and so on, that require tight integration with the field. I'm sure all of you have experienced a situation where a salesperson comes back from the field excited because they've just closed a deal with a particular prospect, and when they tell your operations team what they've promised, the operations team throws their hands up in the air in horror because the promise simply can't be realized. So in most organizations, there are numerous examples of friction that's added into the quality of customer service or the delivery of customer service that can be directly traced back to poor integration between the field and the office. The last problem that we have, or at least the major one that I want to talk about, is selective engagement. If we have salespeople out there in the field, what inevitably happens is they take responsibility for a whole bunch of activities. And the reason they do is because of point 3. They need to overcome the integration problems. In other words, they need to essentially own the customer interface in order to protect the customer from the integration issues that will otherwise occur. So what ends up happening is our field salespeople inevitably end up being busy. Not busy necessarily because they're selling, but busy because it's necessary for them to be involved in customer service, and in most occasions to be involved in fulfillment also. So the reality is that field salespeople tend to be crazy busy, but sadly not crazy busy selling. A typical field salesperson does 2 business development appointments a week. Doesn't matter whether we're talking about Australia, New Zealand, or here in the US. The average is exactly the same, and it doesn't vary a lot from organization to organization, assuming major sales environments. Now, what happens in a situation where a salesperson is crazy busy with customer service and fulfillment is they end up being very selective about who they will go speak with where business development is concerned, because they're aware of the fact that business development by its very nature is speculative, and they're aware of the fact that there's an enormous range of likelihoods. The probability of winning a deal when you interact with someone for the first time can range anywhere from single percentage points up to very high probabilities. So if salespeople are time poor, inevitably what they want to do is to scrutinize prospects, to interrogate them on the telephone, and to find out if they're qualified. And typically what qualified means is that you have a prospect who's admitted that yes, they're in the process of making a purchasing decision, and yes, they have a budget. Now that sounds nice, great for conversion rates, but the consequence of salespeople's qualification, which of course we should remember is an inevitable consequence of them being so busy, is that salespeople qualify aggressively, and they only engage with customers who they perceive have a high likelihood of purchasing, which is great for your conversion rate, but terrible for your volume of deals, terrible for your volume of business development activity, and ultimately terrible for the margin that you earn in the deals that you do win, because of the fact that salespeople tend to engage late and find themselves in competitive bidding situations. So there's a whole bunch of costs there associated with performing tasks in the field that don't absolutely need to be performed in the field. Now, of course, there are some tasks that do absolutely need to be performed in the field, and they should be. What I'm encouraging you to do, however, is to avoid assuming that A, because it's selling, it should be done in the field, and B, because we have a person out there in the field who's called a salesperson, they should automatically own the entire customer interface. So how do we identify those situations or those activities that really should be performed in the field? Where sales is concerned, here's a little decision tree for you. Now, if you look at the decision tree, you'll see that I'm suggesting really 2 situations where it makes sense to be selling in the field. In the first situation, we have a salesperson out there looking to win a relationship of some significance with a new account. In the other situation, we've got a salesperson out there talking to an existing account, but encouraging them to purchase a new line that is fundamentally different from what they've been purchasing currently. Now, in both those situations, there's a case for field representation. And the reason why there is a case, or may well be a case, is because these have the potential to be high-risk purchases. And what I mean by high-risk purchases is that there are a lot of intangibles associated with those purchases. It's not possible for the customer to have absolute certainty around the decision that they're making. So therefore, they have to place trust, they have to take a risk, and the trust in the individual is important. Okay, now these intangibles can be commercial in nature, and of course they can be technical in nature. And in those situations where there are a lot of intangibles, absolutely it makes sense to have a salesperson out in the field selling. But it's important not to overestimate the number of situations where that field representation is required. So two things happen. One thing that happens is when customers become used to transacting with your organization, the risk disappears quite quickly. So in most cases, when customers have transacted 1 or 2 or 3 times, the requirement for face-to-face representation tends to vanish. But the other thing that occurs is that when customers have purchased from your category 2 or 3 times, also the requirement for face-to-face representation tends to diminish. Here's an example. I remember the first time that I bought a computer online. It was from Gateway, and it was quite a risk. So I wasn't prepared, because it was maybe the second computer that I'd ever owned. I wasn't prepared to simply go to the Gateway website and press the Buy Now button. You know, that was a scary proposition. So I felt the need to talk to somebody on the telephone. Okay, now for a lot of years, our organization bought computers from Dell, and we stopped doing that for a long time, but recently they released an exciting new Ultrabook, and I decided I wanted to buy it. I didn't even think twice about going online, selecting the machine, clicking the Buy Now button. I had zero interest in talking to someone on the other end of the phone. In fact, the reality is that someone from Dell has been trying to call me every day for the last 3 or 4 weeks, and I haven't bothered to pick up the call because I just don't see the need to have an unnecessary conversation. So there are a lot of reasons why it may not be necessary for you to have field representation in order to win sales, but I do maintain that in the situations where it does make sense, you absolutely should have someone out there in the field. When in doubt, test. Okay. So the question that I always get about this point is, what about relationships? Now, when people pose that question, I think that they think that the question sounds like an objection. But here's the thing. It's not an objection, it's just a question. And if you turn the tables on people who ask that question and respond to them by saying, well, what about relationships? What you tend to discover is that they stammer and stutter, and they don't really know exactly what the objection is. They just feel like there's something obscene about the elimination of field representation where sales is concerned. So I'm not interested in why this hesitation exists, but I am interested in a little bit of history here. I remember in Australia it was maybe 15, no, probably longer, 20, probably 20 years ago, maybe longer still, when banks were considering introducing automated telling machines. And I don't know if any of you remember, but there was an uproar on the television. There were commentators talking about how we were dehumanizing the relationship between the customers and the bank, and talking about how customers would surely miss the intimacy, the relationship that they have with the bank teller. Well, history suggests that customers don't give a jot in where most transactions are concerned about the relationship between that they have with the bank teller. In fact, I'm pretty sure most of us would rather not have a relationship with a bank teller, particularly if it means we have to queue up or wait until 10 o'clock in the morning in order to get access to our funds, and have some young pimply-faced person poking around inside our bank accounts. Okay, so it transpires that people prefer, in many situations, and banking is not the only one, of course, to transact with machines. So the irony is that clients will invest in relationships only when they don't have to pay a premium for one, and when they don't suffer any inconvenience as a consequence of dealing with a human being. So that's just a cute way of saying that customers may like relationships, but they're not prepared to pay for them. The reality is that clients don't particularly want relationships with salespeople because they tend to come at a cost unless they're absolutely necessary. What customers want is products and services delivered fast at reasonable prices. And if you have salespeople involved in your distribution channel when they're not absolutely required, what you'll end up discovering is that salespeople are adding friction unnecessarily to your distribution process, either by causing you to increase prices or preventing you from decreasing prices as fast as your competitors, or alternatively, by making it actually more difficult for customers to transact with you. So, I talked about the notion of an inside-out sales function. So what I want to suggest we do here is to start with a blank screen and build a sales function from scratch. And I'm showing you the end result here. We're going to build it one piece at a time, one module at a time. And this is, as I said a moment ago, what I'm calling an inside-out sales function. So if we start at the inside and built outwards, here's what I suggest we could or should end up with. So let's get started. So the inside-out sales function starts with customer service. And it always must start with customer service. And the reason it must start with customer service is because most of your organization's revenue is going to be routed through the customer service team. So what I'm going to suggest is we take our customer service team and make the customer service team responsible for order entry, issue and job management, and quote generation. Consequently, the greater majority of revenue for most organizations will be flowing directly through the customer service team. In other words, if a customer knows exactly what they want to order, if they know the list of part numbers or the description of the items they wish to place an order for, they can and they should call and talk directly to customer service and place that order. I mean, in a perfect world, they wouldn't even talk to customer service, they would go directly to your website. In fact, you could probably think of customer service as a proxy for your website if you don't yet have e-commerce, or if it's not possible to have e-commerce. Now, what do we have to do to achieve this? What we need to do in most cases is to fix customer service. I know many of you will have customer service teams, but what you're likely to discover if you take a look at your customer service teams is they're under-resourced, under-equipped, they're lacking in capability, and they're lacking in self-esteem. And the reason for all of those issues is because salespeople are primarily responsible for customer service in spite of the fact that we have notionally a customer service team back in head office. So what I'm suggesting we do is to fix the customer service team, resource it properly, resource it so that it can handle 100% of simple transactions, 100% of issues, and ideally all of your quoting and documentation. So add the necessary number of people to your customer service team, train them properly, and provide them with additional resources that they can draw on when required to fulfill customer requests, and then route everything that fits into the order entry, job management, issue management, and quote generation categories to your customer service team. Now, the question that I always get from salespeople at this point is, well, what happens if I'm in the field and a customer has an issue? Well, what happens is the salesperson doesn't personally solve the customer service issue. And the reason for that is that, A, the salesperson probably won't do a great job of it because they're in the field as opposed to being in the office close to production or close to operations. And number two, the salesperson will train the customer to ring the salesperson direct rather than customer service, and all that's doing is adding friction to the relationship with the customer. So what should happen in that circumstance is, if the salesperson's with the customer, presumably it's to sell them something, business development. If they discover that there's an issue of some kind, what they should do is put their conversation on hold temporarily, grab their cell phone, call a CSR, a customer service representative, put the phone in speakerphone mode, upend it on the desk, and introduce the customer service representative to the customer and listen in while the CSR takes down the details of the issue, enters it into CRM, promises to resolve it, and gets on with it. As soon as the conversation is complete, the salesperson can hang up her telephone and get back on with business, and of course the business that the salesperson is engaged in will assume is business development. So we've achieved a number of things there. Number one, we haven't caused the salesperson to get involved in customer service. Number two, we have caused the customer service person or enabled the customer service person to truly take ownership of the issue. Because that's exactly what we want. If there's an issue, we want a customer service person, not a salesperson, to own it. We've also trained the customer how to handle customer service issues. And of course, if the customer follows the salesperson's lead, and our experience suggests that they readily will, they will as a consequence end up with a far better quality of service. Okay, so that's customer service. Once we have customer service fixed, now it's important, I hinted at this before, that we fix customer service before we touch anything else. And in particular, before we encourage salespeople to start routing orders, simple orders, and issues to customer service, we need to make sure that the customer service team is robust enough to be able to handle those issues and orders. So in addition to adding staff, what we may want to do is take some of our more technical people and put them temporarily in the customer service team while we make the transition, so that we're comfortable that customer service has the capacity to handle whatever's thrown at it. So this is the most important part of the transition. If you're going to mess it up, this is probably where it occurs. So now we have customer service. The next thing to think about is inside sales. So it's easy to think that if it starts with S, it should be done in the field. But as I've suggested on a number of occasions, there are a whole bunch of sales situations that don't require field representation. Now, in a situation where a customer rings and they know what they want, customer service should take that order. So for that reason, it makes sense for customer service to triage all inbound calls. If the customer service detects that the customer knows what they want, then they should take the order on the spot. But if they're in a situation where the customer acknowledges they have a problem but doesn't know exactly what they want, our suggestion is that that call gets routed to inside sales. So in inside sales, we have a small team of people, sometimes a very big team of people, who are responsible for selling on the telephone anything that reasonably can be sold on the telephone. So in the case I just detailed, a call gets routed to inside sales. Inside sales listens to the customer's challenge and makes a suggestion. If it can be closed on the phone, they close it on the phone. In the small percentage of cases where field representation is required, they have the ability to escalate it to field sales. But you will be surprised, shocked even, by the number of sales opportunities that can actually be prosecuted on the telephone. So our advice here is to start with a couple of inside salespeople. Two is a much better idea than one, because that way if you have issues, you can distinguish between process issues and people issues. So start with 2 inside salespeople, and start with the inside salespeople calling existing accounts. One trick, if you're selling something that's consumable, is you can dig into your ERP, analyze your customer's purchasing data, calculate the average number of days between orders, calculate the number of days since the last order, and consequently end up with a list of people who inside sales can call and initiate a conversation simply by saying, hey, I can tell from our records that you must be just about ready to order a new set of business cards or whatever the case is. Can I process that order for you? Okay, very easy to do, very simple transaction, and from the customer's perspective, it's almost a value add, particularly where routine replenishment type decisions are concerned. Once inside sales are comfortable making those kind of sales, then they can start talking to external accounts. Now here's an interesting point. It's easy to assume that if we want to win new accounts, we should have field sales go out and chase new accounts. But what we've been discovering, particularly here in the US where things are more competitive, and Australia doesn't lag too far behind the US, is that, if at all, sometimes it's easier to penetrate new accounts from inside sales than it is from field sales. Here's the reason why. If in order to penetrate a new account, the ideal is that you go and talk to the executive suite. So let's assume that you sell a commodity product, but you want to sell some sort of supply agreement, which is a complex sale, a major sale. And in order to make that major sale, it's necessary for you to talk to a middle management or even an executive. The problem that's likely to occur is if you attempt to reach out to a member of middle management or a member of the executive team of your prospect, of your client organizations, you're going to discover it's very, very difficult to make contact. Okay, so sometimes it's much easier to start off chasing simple transactions, and then once you have a relationship with the organization, to put a salesperson in that organization and have the salesperson sell their way up the firm. The reason this makes more sense is most large organizations employ procurement people whose job it is to speak to vendors. So what that means, it's quite simple for inside sales to follow up on the back of simple email campaigns with appealing offers, talk to the procurement people or talk to branch level people or people in the plant, and to win initial orders, even if aggressive discounts or special offers are required to do it. Now, your reason for winning those initial orders may well be, and this is my suggestion, to open the door so that you can get a salesperson in. So our approach, if you're looking for major accounts in situations like this, is to approach the organization with aggressive offers, have inside sales follow up on those offers, win the account with simple transactions, and then once you have a relationship with the organization, put the salesperson in there and make it the salesperson's objective, not of course to replenish the simple work that's already been won by inside sales, but to work their way up to the executive suite so that they can win whatever it is that you're ultimately looking to win. Okay, different way of thinking about business development. So that's inside sales. Upstream from inside sales, the next function is promotions. So the job of promotions is to generate a list of people to be approached either by inside sales or by field sales. Now, under no circumstances does cold calling make sense. It simply doesn't. For those of you who are interested in the reasons why, I just published today, in fact, Chapter 9 of The Machine, which is my upcoming book, on my blog, salesprocessengineering.net. So if you're interested in reading more about promotions, you want to go and check the blog, and there's a pretty exhaustive article there talking about how to generate sales opportunities. So our advice is always to initiate opportunities by sending some sort of pre-approach campaign, and this is the job of promotions. To decide on what is the basis for engagement for all selling activities, to determine offers in conjunction with management, and to send pre-approach email campaigns that preempt a call from inside sales or preempt an approach from field sales. Okay, so the job of promotions is to maintain a queue of sales opportunities upstream from field sales and inside sales, such that inside sales and field sales never have to be idle. Now, whenever they finish whatever activity they're performing currently, there's always somebody else who they can pick up the phone and call, and that person has some idea that they'll be calling because they've already been approached with an email, at the very least, from the promotions department. So in most cases, we're talking about very simple campaigns here. In the case of the replenishment call I suggested before from inside sales, promotions can generate and send emails in very small batches, no more than 1 or 2 days ahead of inside sales, advising customers that inside sales is going to be making a courtesy call in the next day or so to follow up on this particular line. Okay, nice, simple, text-based customer service type emails, but of course promotional in intent nonetheless. The last function then is field sales, and for those of you who've been following our material over the last 15 or 20 years, will know a little bit about our approach to field sales. The trick with increasing the productivity of field sales is to split the salesperson essentially into 2 parts. So if we look at a salesperson and classify the activities they perform, put their activities in 2 buckets. One bucket is going to concern those activities that absolutely must be performed in the field, and the other bucket is going to contain the activities that don't absolutely have to be performed in the field. The trick is this: to take those activities that must be performed in the field and have the field-based salesperson perform those activities and only those activities. Take the rest of the activities and give them to a person who is essentially the salesperson's executive assistant. Now, the technical term we use is sales coordinator, but the term I'm going to use for most of this discussion is executive assistant, because that is essentially what a sales coordinator is. So, those of you who work in software have heard of pair programming. This is kind of like pair selling. We have 2 people working closely together. We have the salesperson out there in the field, and we have the salesperson's executive assistant working in the office. The 2 of them work together to prosecute sales opportunities. So what actually happens is the sales coordinator owns all of the open opportunities that have been provided to him or her by promotions, as well as those that have originated with inbound inquiries or been escalated from inside sales. Plus, the sales coordinator owns the salesperson's calendar, just as any executive assistant would. The sales coordinator is responsible for prosecuting all of those outside opportunities, and as a consequence of that, for putting into the salesperson's calendar the field activities that absolutely have to be performed. Now, as a consequence of this, the salesperson's day is simplified significantly. The salesperson goes, as a result, from performing just 2 business development appointments a week to easily performing 4 business development appointments a day. That's a 10 times increase in productivity. So we've been doing this for years here and in Australia, and there's a long track record showing the increase in productivity. The other thing that we've learned from our track record doing this is that salespeople, while they may raise their eyebrows at this model in the first instance, once they've experienced it, never want to go back. For the same reason that executives, once they've had one, never want to give up their executive assistants. And the reason in both cases is that by providing a high-value person with an executive assistant, we multiply by an order of magnitude in this case, probably in all cases, that person's productivity. Now here's the thing. If a salesperson costs you $100,000 a year, and by adding a sales coordinator, you can increase their capacity, their effective capacity by 10 times, it almost doesn't matter what you have to pay for the sales coordinator. Now the reality is you're probably going to pay about half what it costs you in total to have a field-based salesperson, so it's an incredible deal. But the reason it doesn't much matter is if you wanted to achieve that same productivity increase by adding more salespeople, you would have to add 9 more salespeople for every 1 that you currently have. So the economics of it are a lay-down misère. Okay. So that's the final model. Let's look at the whole thing. In fact, I'll expand this to take up the whole screen. Don't forget, if you have questions, go ahead and ask them in the chat window. So let's take a walk through the final model. We have the customer service team, the most critical point and probably the first point of failure in the model as a whole. Customer service team are triaging all inbound calls, placing simple orders, handling all issues, 100% of issues, and in addition to that, ideally generating simple quotes, and in many cases, tracking the flow of jobs through the plant or through the organization of whatever type. Upstream or beside customer service, we have inside sales. Inside sales is essentially outbound, although they will have some inbound calls escalated to them by customer service. Inside sales are out there chasing relatively simple transactions, those that can be readily won on the telephone. And in many cases, as we discussed, they're making quite a contribution to business development also. The opportunities that are being prosecuted by inside sales and by field sales are being generated by promotions, and in many cases, promotions is just one person with a stable full of simple promotional campaigns who turns the handle and churns out small batches of campaigns a day or 2 ahead of inside sales or field sales following up on those campaigns. And then field sales, of course, consists of 2 people. We have the salesperson out there in the field and the salesperson's executive assistant. In case you're wondering, I've probably hinted at this already, but let me state it explicitly. The ideal relationship between, or not the ideal, the only possible relationship between the field salesperson and the executive assistant or the sales coordinator is 1-to-1. Now, there's a very simple reason for that. An executive assistant is going to enable the salesperson to go from performing 2 business development appointments a week to 20 business development appointments a week, a 10 times increase in volume. Now, if you look at the total effort expended to prosecute a sales opportunity, you discover that the greater majority of that is actually performed inside, not outside. There's fulfilling literature requests, there's sending countless emails, scheduling and then rescheduling appointments and hustling the various participants together. There's an enormous amount of essentially hustling work that's required to prospect a sales opportunity. And that's why, of course, many field salespeople spend most of their time in the office. So if we increase the opportunities under management by 10 times, and most of the work associated with prosecuting an opportunity is performed inside, when we take a salesperson from doing 2 appointments a day to 20 appointments a week, you can appreciate the magnitude of or the volume of additional work being performed by the sales coordinator. It's simply not possible. It's not practical. It's not sensible to have 2 sales coordinators managing 1 salesperson. If you can't, it doesn't make sense to say, well, we can afford to have a salesperson, but we can't afford for them to be busy. If you're in a position where you can't afford to add a sales coordinator, then you can't afford to have a salesperson. What you should be doing is adding the sales coordinator and having your chief executive do the sales calls until you're generating enough revenue to be able to build this out properly. Okay, let me minimize this so I can see if we have any questions. No questions. You're a quiet bunch today. So that's the theory. Let's talk a little bit about how to make this work in practice, or more specifically, what are the challenges? And the challenges really relate to the fact that what we're doing here is nothing short of division of labor. So normally, when I talk about our approach to sales, what we call sales process engineering, I start by talking about division of labor. But in this case, I've sprung it on you by surprise. What we've actually done here is applied division of labor to the sales function. Because a typical sales function consists of one fellow out there in the field doing a whole bunch of stuff, who essentially owns the entire customer interface for a subset of your customers. Now, if you have two salespeople, they're actually working in parallel. So, it's similar to how manufacturing would have looked about 150 years ago. But what I've done here, almost by sleight of hand, is applied division of labor. So we now have a team of specialists, customer service specialists, inside sales specialists, and we've even split the field sales activity between an executive assistant and a specialist business development person. So the obvious challenge there is that we have multiple people working together to generate opportunities, to prosecute opportunities, and to manage accounts. But customers, clients, expect a single conversation. Now, it's a myth that customers want a single point of contact. Okay? Customers don't want a single point of contact. They would much rather talk to a specialist. But here's the thing. They don't want to repeat themselves over and over again every time they talk with someone else in your organization. So clients would like to be able to talk to the most appropriate person at any one point in time, but they expect that the person who they talk to understands the backstory. So clients want multiple points of contact in reality, but a single conversation. So our challenge is, how do we synchronize our team such that our team can present itself to the customer in the form of a single conversation? So there's a few ways to do this. The first, which doesn't appear on here, is to centralize as many activities as we possibly can. Remember, that was rule number one when we talked about the new set of rules. And the reason we want to do that is if we can have customer service, inside sales, sales coordination, working in close proximity to one another in the one office, and if ideally our sales support team can be closely located to operations, we end up with a whole bunch of synchronization happening by default, because that team operates, or team members operate closely enough to one another to be able to overhear each other's telephone conversations almost, or in many cases, literally. So I have a question here. 10 to 4 Monday to Thursday and approximately 3 hours on Friday, the only value hours in a week. This equates to just 23 hours a week. Should we be engaging salespeople for 38 or more when customers only want to see salespeople during those high value hours? Well, that's not my experience at all. I mean, I travel around Australia and the US, and Charlene, my assistant, books appointments at all times of the day. I have appointments at 8 o'clock in both cities. I have appointments at 4 o'clock in the afternoon, sometimes 5 or 6 in the evening. So I would say that if clients are saying to you they only want to meet you during those hours, you're probably not out there prosecuting major sales opportunities. Because if the opportunities were significant enough, they'd probably be more flexible in when they're going to talk to you. So if these are not major sales opportunities, to my mind, it begs the question, well, why aren't we prosecuting those opportunities on the telephone? So that isn't my experience at all on either continent. I'd be interested to know exactly what product you're selling. Type it in the chat window if you can. So there are two formal approaches to synchronizing the sales support function. The first is where the field salesperson is concerned. the sales coordinator owns and manages all sales opportunities, and of course the sales coordinator is centrally located. Commercial real estate. Okay. Yeah, I can't comment on that at all. I haven't experienced that, and I've got to say, in the work that we've done with our clients, it's certainly not across all sorts of sectors. It's not a recurring theme. I mean, what clients will ask for and what they will accept, I've got to say, are two different things. You know, if you say to clients, when would you like your proposal, they always want it tomorrow. But the reality is they'll accept it in a week's time because they're not going to get to it, to evaluate it, for another 2 weeks after that. So, I mean, what clients will tell you they want a single point of contact, in spite of the fact that their behavior demonstrates that they actually want multiple points of contact. So I think that in most cases, if a customer really wants to meet with you and you say, well, look, I'm available between 8 o'clock and 10 o'clock on these 3 days, they will make themselves available. If they're not making themselves available, then you have to question, well, how badly do they want to meet with you? So the second approach to synchronizing the team is to run daily stand-up WIP meetings. Okay, so we learned this trick from working with manufacturers, and as soon as I saw it a couple of times, and more in the US, I've got to say, the Australian manufacturers aren't as good at doing this, but every manufacturing organization we work with in the US, it's a ritual. You know, 8 a.m., sometimes 7:30, sometimes earlier than that. A bell rings and there's a daily stand-up WIP meeting. WIP stands for work in process. So as soon as we saw that occurring, we took it and we applied it to customer service and to inside sales, and in fact to the entire sales support team. And in many cases, we have a representative from procurement, and importantly, a representative from operations come and stand in, I almost said sit in, on those stand-up WIP meetings. So what happens in a WIP meeting is you quickly review the list of open jobs, open issues, whatever the case is. You highlight those that look like they're running into problems, they're not performing to plan. You scrutinize them, you figure out what the next action is that's required to rescue them. Everyone agrees on their action list, and they dissipate and go back to their work. Generally what we do is we synchronize the WIP meetings in sales support with the WIP meetings in manufacturing or in production. So if we work in production environments where they have twice daily WIP meetings, we will actually have twice daily WIP meetings in customer service. And we'll have whoever ran the WIP meeting in production come and sit in on the WIP meeting in the customer service and inside sales team. Alan says, I know it as a toolbox meeting. All the guys sit around the factory on the toolboxes. Yeah, great. And you know what? In a factory environment, I don't mind if people sit down, because they don't generally sit down on the job. But in an office environment, if we're talking about customer service and inside sales, we stipulate always that they stand up, because they're used to sitting down. The minute you sit down, they start trash talking about stuff in general. We want to make sure that they get in, they have the conversation at hand, they stick to the agenda, and they get out again. If you allow a WIP meeting to deteriorate into a general chit chat, you'll find that it's impossible to enforce them on an ongoing basis. Okay, so they're the two tricks. The next trick, and the most contentious one, although in reality probably the easiest one to put in place, is you must eliminate performance pay. Now you've probably guessed the reason why. I'll give you a hint. In division of labor, or under division of labor, performance pay doesn't make sense. Well, actually, I'm not giving you a hint, I'm telling you the answer. Under division of labor, performance pay doesn't make sense because of the fact that it pits team members against one another. So if you think about it, piece rate pay was eliminated in manufacturing 50 to 100 years ago. And the reason it was eliminated in manufacturing is as manufacturing transitioned to division of labor, it became necessary for workers to work together as a team. It no longer made sense for a single person to sprint and generate a whole bunch of work in process if people around them were bottlenecked. All they're doing is generating cost and almost certainly causing rework to increase. So because we're transitioning here from a craftsperson environment to division of labor, it's not just desirable, it's absolutely necessary that we eliminate performance pay. Okay. Now, this is not an idealistic argument, it's a practical argument. What we found is if we're working in an environment and they refuse to eliminate performance pay, we simply can't get this approach to work properly. Not possible. So if we're considering working with an organization and management decides they don't want to eliminate performance pay, then we simply won't work with the organization. We've run that experiment many times and enough to know with absolute confidence that you can't make this work if you're wedded to performance pay. Now, if you want an ideological argument for performance pay, go and read Drive by Dan Pink. Dan Pink presents data from studies that show that performance pay actually damages the performance of knowledge work. He shows that performance pay can increase productivity if and only if your workers are performing mindless, repetitive tasks. But I would hope that all of you on this call are clever enough not to have your workers performing mindless, repetitive tasks. And if, as a consequence, your workers are performing knowledge work, then Dan Pink shows in his book that performance pay actually reduces productivity where knowledge work is concerned. I have a couple of questions. Dan asks, what about profit share for the whole team? No problems. Damon asks, what's the best way for a small or micro business to implement this model? Should you start with a promotions person? Okay, good question. Here's a hint. If you're a small business and you can't afford to add all these people, forget about the promotions person on day one. Have an office manager or someone else do the promotions. But here's the first person to add. The first person to add is the sales coordinator, the executive assistant. So we do a lot of work, particularly in Australia with small organizations, and we have a really cool trick, a very cool approach that works beautifully. In fact, on my blog, there's an interview with a small accounting firm in Perth that you want to go listen to. It's fairly recent. And we talk about how we applied this model. What we do in a small organization, like a micro business with less than, say, 20 people, is, in most cases, get rid of the salespeople altogether. We recognize that a business that size doesn't need field-based salespeople, dedicated full-time salespeople. What we do is we turn the executive assistant into the salesperson. And then we provide the CEO, turn the CEO into a salesperson. Then we provide the CEO with an executive assistant. The executive assistant takes full ownership of the CEO's calendar, manages both the sales-related activities and the operations activities, and then we give that person a clear set of instructions so they know they know the necessary mix. So we say, well, every week we want a 60-40 mix of operations to sales activities. Okay, and that's a great way of easing into this model. Have I missed a question here? Bob asks, looks like we're talking primarily about business generation from new clients. How does this model apply to new business in larger, complex sales environments? Well, I'm not just talking about generating business from new clients. When I use the term business development, so I'm really differentiating between, on the one hand, processing transactions, which can be done by customer service or by inside sales, and on the other hand, business development. And in my book, business development means winning new accounts or making major new sales to existing accounts. In other words, new lines. And this model works perfectly for both of those. And I think they're probably the only two options. Where profit share is concerned, I don't have any recommendations whatsoever. Where profit share is concerned, none. You're talking to the wrong person if you're looking for advice there. My only interest where this discussion is concerned is eliminating commissions, simply because commissions damage the fabric of the team that we're trying to build here. Okay, so your first challenge, if you want to implement this after you've grappled with the synchronization problems, is to customize the model to suit your organization. So what I've got on the screen here now is an example of how an organization that we worked with recently went about doing exactly that. Now, you're going to look at this resourcing model and think, well, it's different. But the interesting thing is it's not that much different. And I actually looked through our files to find an example of a resourcing model that was as different as possible. So this organization manufactures point-of-sale material out of polypropylene. They've been very successful with this model. In fact, they transferred some of their field salespeople into internal account managers, or inside salespeople, in other words. And it was very interesting. I recorded a video with one of the salespeople who they brought in from the field and turned into an account manager, which is the same as inside sales. And the account manager was waxing lyrical about how much more productive he is now working inside as opposed to outside. You know, he couldn't speak He couldn't speak. He couldn't possibly have been more excited about how great the transition was. Great from his perspective, great from customers' perspective. He talked about how he could deliver better customer service, be more accessible, and he talked about how he was just as effective on the telephone. In fact, I think if you look on our channel on YouTube, it may actually be possible to find that interview. So even though this model looks different, here are the components. Up the top here, we have customer service. And down beneath here, we have the inside sales team. It's just that these are called account managers. We have the promotions team here, who's responsible for generating opportunities. All opportunities go directly to account managers, who prosecute them with the assistance of customer service when required. And then the one thing that's different is over here we have a design team. Now the design team has two types of team members. There are the internal team members and there are project leaders out there in the field. Those of you who've read our material are probably familiar with the concept of project leaders. In technical sales or in particularly engineer-to-order environments, what we tend to do is pair salespeople up with project leaders. And what ends up happening then is the salespeople are responsible for the commercial component of the transaction, and the project leaders are responsible for the technical component of the transaction. Now I say pair loosely because you can see in this situation that this organization, and it's quite a large organization I've got to say, has just one business development manager. And that business development manager is across so many opportunities concurrently that it's necessary for them to have 3 project leaders to provide the necessary technical input for all those opportunities. So the way this works is when account managers are talking to accounts on the telephone or prospects on the telephone, if they discover an opportunity that would really benefit from or that requires a field representation, they'll escalate it to the special projects coordinator, in other words, the BDM's executive assistant, and that opportunity will be prosecuted by the special projects team. All the others are prosecuted by the account managers, in other words, inside sales. Okay, so there's an idea of how you can go about customizing this model to suit your circumstances without corroding the integrity of it. Okay, so 2 steps to apply this, 2 critical steps. The first is to design the resourcing model, and the next step is to map the critical workflows. So this is obvious and it's easy, but it's often forgotten. We are talking about division of labor. So we are talking about handing accounts, sometimes even opportunities, backwards and forwards between people. So it's critical that in addition to good communication, we have to have standard workflows. Now in some cases, let's say for example customer service, the workflows can be as simple as checklists. In other cases, perhaps the prosecution of major opportunities, those opportunities are going to be a lot more, quite a bit more complex. So if you go into any organizations we've worked with, you'll see these workflows printed out and plastered around the organization, and people go and refer to them to figure out what comes next. Okay, so that's an important next step. Okay, I've got just a couple of minutes left, and in the remaining couple of minutes, I'm going to fulfill my promise to introduce you to an approach to kicking the field sales addiction, our own Ballistics 12-step program. So the title's tongue-in-cheek, but the contents of it are critical. So this is how in the real world you go about making the transition to the inside-out sales environment. But first I have an offer for you. Now I know that we have a no sales pitch guarantee with this webinar, but the reality is that this isn't really a sales pitch because I'm offering to give you something that's absolutely free, and I guess if it's free then it's not really a sale. So the offer is this. I already spend a good percentage of my time conducting 20-minute what we call best practice briefings with new accounts or potential accounts. What I'm prepared to do is to have Charlene schedule, if you're interested, 40 minutes, not 20 minutes, for me to have discussions with those of you who are interested in talking about the practical implications of this. Now, I'm not going to be talking to you about how ballistics can help you do this. That's not on the agenda. If you want to talk about that, you have to schedule a second call to talk about that. So here's the agenda. The first thing that needs to happen before the call is you need to read the first 5 chapters of The Machine if you haven't already. As soon as we get on the call, we're going to review your organization and your current sales structure. In fact, you can send me this information in advance. I did one of these webinars for the US yesterday, and I've already got a bunch of, they're on my blog, the first 5 chapters of The Machine. I've already got a bunch of emails where people have sent me this data in advance. And then what we're going to spend our time doing is reviewing a typical day in the life of the salesperson. And then once we have an understanding of the context, we'll talk about the appropriate application of sales process engineering. So we'll wrap about, well, what should the resourcing model look like for you guys? And we'll talk specifically about what would the transition look like, and we'll explore the economics of it and the business case for it in as much detail as we reasonably can in 40 minutes on the telephone. For those of you who've spent time with me, you'll know that if we eliminate the small talk and get straight to the point, we can cover an enormous amount of time, an enormous amount of ground in a small amount of time. And 40 minutes, to my mind, is quite a bit of time. Now, if you're interested in that, I've got a little question up here on the screen. Tick yes. And if you tick yes, what I'm going to do is get Charlene, my assistant, to send you an email with 3 or 4 possible times, and you can pick from those times. So I'm not asking you to schedule. All I'm asking you is if you click yes, we'll get you an email with some possible times, and you'll have the option to pick from them, or to say to Charlene, no thanks, I'm fine just the way I am. So click yes and we'll get those times to you. In a minute I'm going to take this slide away, but I'll put it up at the end in case you haven't had a chance to respond. Okay, so let's move on and talk about the 12-step program. So I've broken the 12-step program up into 3 segments. The first segment is, of course, fixing customer service. So the number one thing that you have to do to make the transition is make sure your customer service team is robust. So resourced properly with the necessary capabilities. And if your customer service team is underappreciated and downtrodden, as is often the case, pay them some attention. Get them business cards. Get them proper headsets that work. Get them dual monitors. Spruce up their work environment and make them feel like a proper team. It's the best investment you can possibly make. Once you've done that, route all repeat orders and issues to customer service and make it mandatory. Mandatory means not optional. Mandatory actually means if you don't do it, you don't work here anymore. I've got to say we work with a lot of managers who don't understand the definition of mandatory. Team members do. They're not the challenge. It's management who we need to, drum this into. Then route all inbound calls to customer service team and have customer service triage those inbound calls. And finally, build a register of all customer service jobs. So by a register, I mean a grid, some sort of display, so that you can have the team leader projected on the wall to conduct your daily stand-up 10-minute whip meeting. Next is inside sales. I suggest if you don't have an inside sales team currently, you start by recruiting 2 inside sales people. 2 is a magic number because, as I said before, it makes it easier for you to differentiate between process problems and people problems. Once you have a customer service team, once you have an inside sales team, convert these people into salespeople's primary point of contact. If they need to call someone, have them call inside sales because they're a lot more accessible than field sales. Centralize the management of all sales opportunities. You need to use a CRM to do that. But if the good news where CRM is concerned is you don't have to spend a lot of money. In fact, you've got rocks in your head, to my mind, if you spend a lot of money on a CRM because they're all the same. And there are open source CRMs that literally cost you almost nothing. In fact, if I look at our consultants who work with pretty much every CRM there is, their favorite is probably the one that doesn't cost anything. Robert, what's the best CRM? They're all the same. They all have the same basic functionality. There's very little difference between them. So it comes down to cost. Here's the thing. If you want one that's pretty, Salesforce beats all the others hands down. If you're going to evaluate based upon cost, which I would recommend, then vTiger beats all the others hands down because it has all the functionality that Salesforce has, but it costs nothing. It's open source. Okay. And lastly, build a register of all open opportunities and review it daily as a team. So the last of the 12 steps is fix field sales. So retain only those field sales people who you can easily keep at full utilization. In a small business, oftentimes that means getting rid of the field team altogether and having the CEO spend a couple of days in the field a week selling. In a larger organization, you're going to reduce the field team to roughly 1/5 its previous size. So that means possibly losing a person or 2, possibly converting some into project leaders if it's a technical sales environment, and possibly moving some inside. But you need to face up to the fact that you don't need all those people in the field. And number 2, if possible, do all of your selling inside and perform only technical tasks in the field. So we've worked on a number of occasions in building services in similar fields. where the critical activities that need to be performed in the field are measurement quotes and installation. In that case, you simply don't need a salesperson in the field at all. You can do all of the selling on the phone and simply have a technical person go out there and do the measure and quote. Phone the results back or transfer via email the results back to inside sales and have inside sales follow up and close. There's a chap in Melbourne called George Yamuni who owns a franchise called Mender Bathroom. George has followed our material for probably 20 years now, and over that time he has been progressively moving to this model, and the results have been absolutely astounding. And he's gotten to the point where his installers do nothing but install. In fact, he sells separate franchises to people who are salespeople who do nothing but, actually they're not salespeople, they're measure and quote people who do nothing other than measure and quote. And then all of the opportunities are generated from television commercials. I'm talking here about the regions that he has full ownership of, particularly Melbourne. And all of the opportunities are prosecuted on the telephone by a team of, I think, 8 to 10 dynamic young people on the phones in Melbourne. If it is necessary to sell in the field, take your much reduced field sales team and provide each person with an executive assistant so that you can push them to the 4 appointments a day, 5 days a week, which is the target. Okay, so there we have it. I've gone a couple of minutes over, my apologies for that, but if you have time to hang around, I'm happy to answer any remaining questions. I'll count to 10, and if there aren't any remaining questions, I'm going to put the other slide back up so that you can indicate, you can request some times. Okay, well, it looks like that's it. I hope this content has been valuable. I know that it's radical. I know that I've covered it quickly, but I'm pretty sure there's value in there for you. By the way, you're more than welcome to use the best practice briefing that we're offered simply to ask questions, or if you think this is rubbish and you want to challenge me on it, then I'll enjoy that too. Go ahead and thank you, Damon. Thank you, Jason. Well, thank you for joining me. Good luck with this, and I hope I'll see you in the next webinar, if not in person. Bye-bye.